Welcome everybody to the next installment of the Diversified Asset Class and Manager Spotlight. My name is Mike Horwath. I am the Chief Investment Officer at Diversified Lifelong Advisors, and today we're going to be speaking about emerging market equities. So starting, really, what are emerging markets? A good tip that I've always received and I always like to pass on is think of BRICS, B-R-I-C-S. Great place to start. It stands for Brazil, Russia, India, China, and South Africa. Great place to start with regards to what are the major emerging markets. But then you can also tie it together with countries like Mexico, Indonesia, Argentina, even South Korea is on that border between emerging market and developed market. So what are the characteristics of companies or stocks within emerging markets? I think the best place to start is they're markets that are becoming more integrated globally. So many of these markets have been closed off to outside investors. They are pretty inefficient. They're not very liquid. And as they become more integrated globally, they tend to have a greater liquidity, greater efficiency, so greater liquidity within stocks and bonds. Right now, you start to see more foreign investment within those markets. So a great place to point to is China. So China, for years, was pretty closed off. But now you see many companies listed on the Hong Kong Exchange, even some on the New York Stock Exchange. So many big companies are becoming easily accessible to foreign investors. Many emerging markets are also transitioning from more agriculture, commodities, to now being more focused on manufacturing and industrialization. Even in the case of China, they're going from a more manufacturing-oriented economy to now a more technology or service-oriented economy. And then lastly, what you find are regulations within these economies has tended to become more strict over time. At the beginning, many of these smaller, less integrated economies don't have much regulation. They don't have much oversight. There isn't much foreign investment. As they get bigger, there's better regulation, better integration with some of the more developed nations like the US, like big European nations, for better regulation and for foreign investors to invest. So what are the benefits of having an emerging market stock or investing in emerging markets for your portfolio? The best place to start is really growth. As you'd expect, many of these smaller emerging countries are growing at a faster pace. If you think about GDP growth within the US, we're sitting somewhere, say 2-3% annualized. That's kind of our steady, consistent, slow growth path. Within emerging markets, China's been not criticized, but been knocked as of recently for being closer to 5-6%, which is nearly double, if not triple, something like the US, but has come down in recent years. But that's the kind of growth you're seeing within these emerging markets. A growth within the middle class, growth within certain sectors with different industries. So you're looking to invest in the growth of these economies. You're also going to get a little bit of a diversification benefit. What I mean by that is because they're less integrated with much of the developed world, there's a benefit that they don't act exactly the same as developed countries. So by having a more diversified portfolio with emerging markets, you're getting that diversification benefit that will act a little bit differently in market scenarios than some of your more established, bigger type of economies like the US, like developed Europe, Japan, and things like that. What are the costs to access some of this growth in GDP and growth in these markets within emerging markets? It really comes down to a few different risks. You have more political risk. Typically, they're more fragile to potential political issues. You're going to have some sort of economic risk because they are developing. You're going to have potential recessions and potential more volatility within these economies. And lastly, there's currency risk. And why is that? Many times as a foreign investor to another economy, you're investing in that currency, or their economy can act differently depending on the strength of their currency versus the US dollar, or some more established currency like the Japanese yen or something like that. So you also have this aspect of currency risk that when the US dollar is a little bit stronger, they'll tend to struggle. When the US dollar is a little bit weaker, they can tend to perform pretty well. So moving to performance within emerging markets, over the last 5 years, it hasn't been a bad asset class to invest in. You see it's annualized about 8% per year. On a year-to-date basis through October, we saw about flat to nearly a 1% return within emerging markets. But what's important to remember, and I think what's important to look at when you look at the emerging market index, is it has changed drastically over the last decade to 15 years. If you look at the composition of that index that you're tracking for emerging market stocks, it's become pretty concentrated. If you look, China is over 40% of that market. And really when you look at it deeper, China, Taiwan, South Korea, emerging Asia is really dominating the landscape of the emerging market index. So when you're investing in a passive way into emerging markets, you're really buying China and some of these other Asian economies rather than, say, India or Brazil, which are smaller aspects of the index, but also have very sizable growth aspects. When we look at emerging markets and investing within them, we have to ask ourselves, what do we think of them today and moving forward? I think a lot of people, look at what's happened over the course of the last 5 years and say, Q4 2018 was a very volatile time. Even, 2015 at that, there was a very volatile time due to commodity issues. So if we look today moving forward, Diversified has a very constructive view on emerging markets. We really like them. And why is that? One, we like the opportunity for participating in the growth of some of these emerging markets. For example, China, Brazil, India, we think there's some real growth within the middle class, growth in their populations. They're just very population heavy compared to the United States. They're growing at a faster rate. We think there's really good opportunity there. We also like the presence of technology within emerging markets. So what I mean by that is if you look at the construction of the companies that make up the indexes or make up the markets within developed Europe, for example, versus emerging Asia has a substantially higher composition of their market dedicated to technology. We really think moving forward, this innovation within emerging markets, the growth of the middle class, this is an area that we see a lot of opportunity within emerging markets. Speaking, and this is a big reason why I like to talk about it today, we've actually overweighted emerging markets within our portfolios. We've dialed back on some of the more developed countries, and we've done that because of this technology, this growth and innovation within especially China. We see a lot of opportunity there. But overall, in summary, emerging markets are developing countries that are becoming more integrated in the world. We think they are a core piece of a portfolio, and we can opportunistically invest or pull back in those areas when we see opportunity. And when we really like them moving forward from a technology standpoint. So I hope you found this insightful. I hope you like these videos, and we always love to hear your feedback. But until next month, when I'll be talking about another asset class, we always appreciate your trust in Diversified. We don't take it lightly. But until then, my name is Mike Horwath, the Chief Investment Officer at Diversified Lifelong Advisors. Stay healthy, stay wealthy. We'll talk to you soon.